Hey everyone, welcome back to the latest episode of IPO This Week. As of this recording, we have 8 companies looking to come out. I'll give you overviews with the trading details on each of the IPOs, and if you listen closely, you'll hear one I'm personally thinking will do pretty well based on my initial look at it. And another one that doesn't meet the profile of companies I typically invest in, so I'll be passing on it. But no matter what I think, let me know in the comments which of the companies you're most interested in. And if there's a lot of interest in one of them, I'll consider putting together a more in-depth video on that company later in the week. And then, after we get through the list of companies going public this week, as always, I'll let you know what companies are having expirations of some of their locked up shares. Alright, to keep JS#93 in the community happy, I'll keep this intro short and sweet. Especially since he's frequently the first to comment with simply, first. Every time I see that, it makes me think how funny it would be if everyone kept it going by commenting with what number they were. Anyways, let's get started with Agrify, ticker AGFY. This company is a developer of hardware and software growing solutions for the growing indoor agriculture marketplace. They tout that they are the only company with an automated and fully integrated solution in the indoor agriculture industry. They believe that because of their trademarked Agrify Precision Elevated Cultivation solution, which they say is different from anything else on the market in that it seamlessly combines their integrated hardware and software offerings with a wide range of associated services, such as consulting, engineering, and construction to form a complete solution available from a single provider, sort of one-stop shopping if you will. Like so many agricultural companies that have recently come out, while they aren't directly part of the cannabis market, they do see growth opportunities for themselves by supporting the sector. The company knows that they were impacted by the pandemic and disclosed that they did take out a Paycheck Protection Program loan, which I think is the first IPO I've noticed this on. To summarize the financial data available in the filing, when comparing the first 9 months of 2019 to 2020, revenue grew threefold up to $7.7 billion, while the company's net loss was just under $10 billion, up from over $5.3 billion in 2019. The Agrify IPO is currently set for Monday, with pricing expected to come within a range of $8 to $10. Agrify stock would then begin trading under the symbol AGFY on Tuesday. As I'd like to share with anyone new here, the information on IPOs are fluid, where dates and pricing often change, so if you see that anything has changed in the offering, definitely feel free to update everyone in the comments. Next up, we have Shoals Technologies Group, who will trade under the ticker SHLS. And I'll say up front that I think this is definitely one to watch. From their prospectus, the company is a leading provider of electrical balance of system, or EBOS solutions, for solar energy products in the United States. EBOS encompasses all the components that are necessary to carry the electric current produced by solar panels to an inverter and ultimately to the power grid. These components are critical products that have a high consequence of failure, including lost revenue, equipment damage, fire damage, and even serious injury or death. Because of the crucial nature of these risks, Shoals believe that their customers prioritize reliability and safety over price when selecting EBOS solutions. Demand for EBOS is driven primarily by installations of new ground-mounted solar energy projects, and to that point, solar is the fastest growing form of electricity generation in the U.S. From 2014 to 2019, annual installations of ground-mounted solar generation capacity in the U.S. grew at a compound annual growth rate of 20% according to IHS Markit, and represented nearly 22% of all new generation over 1 megawatt brought online over the same time period, according to the Federal Energy Regulatory Commission. Additionally, IHS Markit forecasts that this rapid growth will continue, with annual installations of ground-mounted solar generation capacity in the U.S. increasing at a compound annual growth rate of 16% through 2023. For a quick look at the financials, for the year ended December 31st, 2020, they estimate that revenues will come within a range of $174 to $176 million, an increase of $30.5 million, or 21% from 2019. Another good thing to see in their financials is that they're already profitable, estimating that net income will range from $32 to $34.5 million, an increase of $8.1 million, or 32% over 2019. They're also reporting an increase of adjusted EBITDA of 64% over the same time period. Okay, just to share some thoughts on Shoals Technologies IPO. 2021, solar company, fast growing, and already profitable. Price aside, sounds like a winner to me. As for the details of the offering, they plan to raise $1 billion at a $3.6 billion market cap with the IPO on Tuesday, with pricing expected to come within a range of $19 to $21. Trading would then begin on Wednesday, with Shoals Technology stock trading under the symbol SHLS. Super quick, if you're liking the video so far, I'd simply ask you to push that like button. is so important to the channel. It helps us get traction on YouTube, it lets me know that you're interested in IPO videos, and it's free. It takes all of a half second for you to do. Oh, you did it already? Thanks. I told you it was quick and easy. Alright, moving on, we have Ortho Clinical Diagnostics. This company focuses on in vitro diagnostics, a business where they claim to impact approximately 800,000 patients every day. In 2014, they were acquired by the Carlyle Group from Johnson & Johnson and became an independent organization solely focused on delivering high-quality in vitro diagnostic procedures and services to deliver consistently fast, accurate, and reliable results that allow clinicians to make better informed treatment decisions. They currently operate two lines of business. The first is clinical laboratories, which measures target chemicals and bodily fluids for the evaluation of health and the clinical management of patients. The other line is transfusion medicine, which is where blood and plasma are screened and typed at donation. Financially, during the fiscal 9 months ended September 27, 2020, they reported net revenue of $1.2 billion, a net loss of $171 million, and adjusted EBITDA of $322 million. They did note that their net revenue was approximately 5.9% lower as compared to the first 9 months of 2019, primarily due to decreased shipments to customers as a result of the pandemic. Something else to be aware of, as of September 27th, they had a total debt load of $3.7 billion. Not surprising, this is where the IPO proceeds will go, paying it down. Ortho Clinical Diagnostics plans to raise $1.5 billion at a $4.9 billion market cap at their IPO on the 27th, with expected pricing of their shares coming within a range of $20 to $23. Trading would then begin on Thursday, with Ortho Clinical Diagnostics stock trading under the symbol OCDX. Next, we have a software company, Qualtrics International. This company shares in their filing that they have pioneered a new category of software, what they call experience management, or XM for short. Experience management is defined by Qualtrics as the business discipline of finding and fixing experience gaps. These gaps, the difference between what businesses believe is happening and what is actually happening, are where poor experiences result. Without being properly addressed, experience gaps result in failed product launches, customer churn, employee attrition, and eventually brand irrelevance. The XM platform helps other companies or organizations both design and improve the experiences that, quoting the filing, turn their customers into fanatics, employees into ambassadors, products into obsessions, and brands into religions. As of September 30th, the Qualtrics XM platform is utilized by more than 12,000 customers of all sizes, including 85% of the Fortune 100. Looking at the financials for the year ended December 31st, 2019, revenue was at $591.2 million, a growth of 47% over 2018. In the same time period, net losses grew significantly from $37.3 million to just over $1 billion. Also something to be aware of, the company was acquired by SAP in January of 2019 and has since operated as a wholly owned subsidiary of SAP. After the IPO, if corporate governance is an issue for you, Qualtrics will continue to be controlled by SAP. As to the details of the Qualtrics IPO, it's expected on Wednesday, where the company plans to raise $1.2 billion at a $12.6 billion market cap, with pricing expectations of $22 to $26 per share. Qualtrics stock would then begin trading on Thursday under the ticker symbol XM. And every time I see that symbol, I'll have to remember it's not SiriusXM. Next up, we have Vinci Partners Investments. As an assets manager, there's not a lot to say here. They've been based in Brazil since 2009, and they're involved in private equity, public equities, real estate, credit, infrastructure, hedge funds, and general investment products and solutions. To give you an idea on the size of the firm, as of September 30th, Vinci Partners had $8.7 billion in assets under management. Vinci Partners plans to raise $236 million at a $944 million market cap at its IPO on the 27th. Pricing of shares is expected to come within a range of $16 to $18. Trading would then begin on Thursday under the ticker symbol VINP. Staying outside of the US, we have Israel-based ZIM Integrated Shipping Services, whose stock will trade under the ticker, what else, ZIM, Z-I-M. This company, who has been around since 1945, is a global, asset-light container liner shipping company. As of September 30th, 2020, they operated a fleet of 70 vessels, which has continued to get bigger, and they had chartered in 98.5% of their capacity by volume and 98.6% of the vessels in their fleet, which sounds like a very efficient operation to me. With a global customer base of approximately 27,000 customers, ZIM Integrated Shipping operates across 5 geographic trade zones, which are, by highest traffic percentage first, Trans-Pacific, Atlantic, Cross-Suez, which consists of East Mediterranean and Black Sea to Far East trade, and then intra-Asia and Latin America. The company reported full-year revenue of $3.3 billion for 2019 and then $2.6 billion for the first 9 months of 2020. As for net income, they had a loss of $13 million in 2019 and then a profit of $158 million for the first 9 months of 2020. As stated in the filing, the company has adopted a dividend policy which will be in effect after the IPO happens and would distribute up to 50% of their annual net income each year. The ZIM Shipping IPO is expected on Wednesday, where the company plans to raise $306 million at a $2.1 billion market cap, with pricing expectations of $16 to $19 per share. ZIM stock would then begin trading on Thursday. The seventh company on this week's calendar is Home Point Capital. Home Point is a leading residential mortgage originator and servicer. The company uses a business-to-business-to-customer distribution model in which they utilize independent mortgage brokerages as partners to reach their end borrower customers, which now amount to about 300,000. In this model, which they call their wholesale channel, their partners establish and maintain the relationship with the end borrower, while Home Point Capital, as the lender, underwrites the loan in-house and acts as the original lender. While they have other ways to originate mortgages, their wholesale channel is where their primary focus is for growing the business. According to a report by Inside Mortgage Finance, as stated in their filing, the company is the third largest wholesale lender by origination volume in 2020 through September 30th. The company reports total loan originations of $46.3 billion through the broker partner network in the 12 months ended September 30th, 2020, representing an impressive annualized growth rate of 133% since 2018. Fueled by low interest rates and lots of refinancing, revenue more than quadrupled from fiscal year 2019 to just the first 9 months of 2020, coming in at just under $1 billion. This also led to net income of $422 million for the first 9 months of 2020, up from a net loss of $29 million in fiscal year 2019. Beginning with the first full quarter following the completion of the offering, the company does intend to pay a cash dividends on a quarterly basis. Initially, they expect the quarterly dividends to be 15 cents per share, which equals 60 cents per share on an annualized basis and an annual yield of 3% based on a price of $20 per share, which is the midpoint of the estimated range of $19 to $21, where it's expected to price on Thursday. Home Point Capital stock would then begin trading on Friday under the ticker HMPT. Moving on, we have maybe a company that a lot of you might better know through its different brand names. I'm talking about the Southeastern Grocers IPO, whose stock will trade under the ticker SEGR. The company is a leading regional food retailer based on revenue and number of stores operated with a long-standing history in the states of Florida, Georgia, Alabama, Louisiana, and Mississippi. They operate 420 stores. Yes, 420. No giggling or jokes on that number. The stores operate under the iconic Winn-Dixie brand, as well as under the Harvey's and Fresco y Mas supermarket banners. In the filing, the company says that they are the sixth largest conventional supermarket operator in the United States, and the second largest one in the 5 states I just mentioned based on the aggregate number of stores they run. The company also operates 140 liquor stores, 231 in-store pharmacies, and 1 centralized specialty pharmacy. We talked a lot about the grocery store industry in general when Albertsons went public last year, where we talked about things like the margins, the competition factor, and the benefits they reaped due to the pandemic when it came to sales, but also the extra expenses that came along with it to be able to operate in that environment. So a lot of those general areas are applicable here as well. For some more specifics on Southeastern, you might be interested to know that they had filed for Chapter 11 bankruptcy as recently as 2018. As they emerged from bankruptcy with their reorganization plan, the last piece of it was finalized in May of 2020 when the company reached an agreement to sell 62 stores to Food Lion. And then in September 2020, they announced an agreement to sell an additional 23 stores in South Carolina and Georgia to Alex Lee in order to reduce their footprint to the states I mentioned earlier. Looking at the financials, in fiscal 2019, the company generated net sales of $8.3 billion, a net loss of $116.2 million, and an adjusted EBITDA of $292.5 million. And then for the 40 weeks ended September 30th, 2020, the company reported net sales of $7.4 billion, net income of $235.1 million, and an adjusted EBITDA of $473.8 million. Southeastern Grocers stock will be priced at its IPO on Thursday within an expected range of $14 to $16, where they look to raise $134 million at a $725 million market cap. SEGR stock would then begin trading on Friday. The proceeds of the offering will not go to the company, but to the selling shareholders. While this isn't a company that fits the profile for companies I look to invest in, it might be one for people who like to invest in companies they either shop at or work for. A positive for investors is that the company does plan to pay a quarterly dividend of 2.75% of the IPO price, assumed to be at the midpoint of the expected range. Okay, so there's a list I have for you this week. Again, let me know if you're considering any of them in the comments. Now for the investors in the community well versed on lockup expirations, I of course have this week's list for you. A lot of familiar companies we talked about on the channel 6 months ago are on the list. Where does the time go? Starting on Monday, we have Vertex, and then on Tuesday, we have Absolute Software, Allovir, and Li Auto. Li Auto is a company that I had a detailed video out on before they IPO'd if you want to check it out. And then we finish up this week's list with Goedekers, Fathom Holdings, Vasta Platform, and Vital Farms, all with expirations on Wednesday. Okay, so there you have it, another episode of IPO This Week in the books. Again, if you enjoyed the video and want to see more videos like this, please like it, comment on it, and share with your friends and on any of your social media sites. And speaking of social media, I recently made the leap to Instagram, so definitely add me there. And if you're new to the channel or just an occasional visitor, we'd love to have you join the community. It's totally free, you just gotta press that little red subscribe button. And with that, I wish you a good week of trading. Thank you for watching, and until next time, have a great day.